All right, thanks for being with us, everyone. Government plans to purchase more than 3 tons of gold every week under a new reserve buildup program aimed at securing over 15 months of import cover by the end of 2028. Under the agreement, 20% of gold acquired from large-scale miners will be refined locally as part of efforts to add value to the country's mineral resources. Finance Minister Dr. Kaisla Tuforsen says the Ghana Gold Board will spearhead the reserve accumulation program, introducing what he describes as groundbreaking innovations.
To secure the target after netting out debt service, FX operations, energy sector payment, and statutory outflows. The strategy requires an average of 9.5 billion United States dollars annual additions to the country's gross international reserves. The Speaker, to achieve this, the reserve accumulation target, the GANRAP has set an operational weekly gold purchase target of about 3 tons per week. At 3 tons per week and a price of $5,000 per ounce, gross receipts are projected at approximately 25.28 billion United States dollars annually. Mr. Speaker, Ghana's strategy for the acquisition of 3 tons of gold per week is in 2 folds. The first is the Ghana Gold Board to acquire up to 2.4 tons of gold per week from artisanal small-scale mining sector. The Speaker, the Ministry of Finance will be making budgetary allocation to the Ghana Gold Board to achieve the objectives. The second, Mr. Speaker, the Ministry for Land and Natural Resources is to invoke the preemption right under Section 3D of the Ghana Gold Board Act 2025 Act 1140 and Section 7 of the Minerals and Mining Act Act 703 to purchase a minimum of 0.5 tons of gold per week from large-scale gold mines.
Dr. Benjamin Amoy is Senior Finance Lecturer at the University of Ghana Business School. He joins me on Zoom. Good afternoon to you. So, how will Ghana's new gold-backed policy reduce reliance on expensive borrowing?
Thank you very much, and thank you for having me. If you've gone through our history, you realize that we have been using international proceeds, such as loans, in the recent time to support our international reserves. But like the minister just said, the intention of government now is to fall on our own primary commodity, which is the gold, and then to use the proceeds of the gold this time around to shore up our gross international reserves. So this time around, we are not going to borrow, because anytime you borrow, it comes with a cost. The cost is that the inflows itself are dollar denominated, and if you have to service it, you are servicing it in US dollars, and you are also incurring interest cost on it. This time around, you have your own indigenous commodity, that is the gold. You are going to buy the gold with Ghana cedis, and you are now going to sell the gold when needed in dollars to be able to pay off your indebtedness. So this time around, you are not going to earn the asset, mine the gold, or buy it from the miners, and then sell it off and use the proceeds to pay off your hard currency indebtedness. And that, if you look at it, gives you a cheaper and a least cost approach to servicing your indebtedness than the current one. The data that we even have suggests that on the average, we spend about almost 12% or even 15% on servicing this debt. If you look at what Gold Board did last year, Gold Board provided about $10 billion at a cost of $240 million. If you just do a simple back of the envelope, 214 over 10 billion, that's about simple 2%. So it is costing you about 2% to be able to mobilize 10 billion on the face of it. If you look at this approach is a least cost one compared to the former stage where we just have to borrow from the international market to service our indebtedness.
Is targeting 15 months of import cover feasible? Is it realistic by 2028? And what are the risks involved?
If you look at the momentum and how Gold Board mobilized almost 10 billion last year, with the right environment and right support, Gold Board should be able to, over time, achieve this target. But then, the risk in doing this is one, hoping that the price of gold will be around the $5,000 per ounce as envisaged in the policy document. 2, Ministry of Finance will commit and not just pay lip service by making sure that at each point in time, there is enough CDs passed on to Gold Board to aid Gold Board purchase the gold as and when needed. Because you don't want a situation where, just like we are seeing in the cocoa sector, ASM miners mine the gold, Gold Board takes the gold, and then payment becomes an issue. It is easy to smuggle gold than to smuggle cocoa. So if the miners are faced with a situation where they have delivered the gold, payment is not forthcoming, they will be tempted to look for alternatives. So this time around, Ministry of Finance and Bank of Ghana must make sure that as and when the funds are needed, they will make sure that Gold Board will have the funds, pass it on to the licensed dealing members, and then they will go down there to buy the gold. In that case, we are better off managing it. And then, of course, you also have to raise the environmental concerns that, we are going to the small scale area. And if you look at the policy, the small scale sector is going to contribute about 81% in terms of the gold needed. The large scale miners will contribute just about 20%. That means that the overall success of the policy, to a large extent, depends on the ASM sector. The AM sector and its issue. So we need to also look at that aspect and make sure that the ASM sector is within the period highly formalized so that they will be able to produce the needed gold that we need to build the reserves from now till 2028.
Okay, I'm going to ask you 2 questions. First off, how would the weekly gold purchases from local miners impact the economy, and how would this reserve accumulation policy reforms boost investor confidence?
Okay, let me start from the second part. If we are able to go by the target as set by the minister, once you are accumulating the gold reserves, you are posting to the world and the investors out there that, look, you have enough reserves to support your economy. In other words, anytime there is any need to service any debt, you have enough resources to be able to do that. Our biggest problem we had 2021, 2022 was simply that we could not amass enough reserves to pay off our debt. And that is what led us into this trouble. So if we will be able to accumulate enough gold over the period, then clearly we are going to show to the investor world that the economy is strong, and that will lead to an increase in confidence by the investors in our economy. How will it affect ASM and the local economy? This time around, so long as the funds should be released by Ministry of Finance, there is an assurance to the players in the industry that when you mine your gold, there is a ready market, and the pricing that you will get from Gold Board is a good price, so you don't have to worry. We also don't have to forget that Gold Board has promised a traceability system that will, to a large extent, help in formalizing the sector. Once you're able to formalize the sector, you are bringing the sector closer to what the large-scale mining sector looks like. And that in itself creates the needed rollover effect to attract a lot more players into the industry and to assure everybody that the ASM sector has been cleaned up and it is something that we can all trust and get the needed growth from.
All right, Dr. Benjamin Amwa, Senior Finance Lecturer, University of Ghana Business School. Thank you so much for your insights and analysis. You're watching The Marketplace. Now, building inflation slowed further in January 2026 with the year-on-year rate declining to 3.9%, down from 4.4% in December 2025. That's according to data from the Ghana Statistical Service. The latest numbers mark the 9th consecutive month of decline in annual building inflation, pointing to sustained easing of price pressures in Ghana's construction sector. Here's government statistician Dr. Hassan Idrissa.
In January 2026, the prime building cost index stood at 132.4, compared with 127.4 in January 2025. This translates into a year-on-year inflation rate of 3.9%. Year-on-year inflation simply compares prices today with prices in the same month the previous year. So this means building costs are 3.9% higher in January 2026 than they were in January 2025. On a month-on-month basis, inflation was 1.1%. Month-on-month compares prices with the previous month. This means prices increased by 1.1% between December 2025 and January 2026. Here is the important part. The 3.9% year-on-year inflation marks the 9th straight month of decline. It is lower than the 4.4% recorded in December 2025 and much lower than the 23.7% recorded in January 2025. What this tells us is that cost pressures in the building sector have eased steadily. Let's break this down further. Labor inflation fell significantly. Year on year, it declined to 5.4% in January 2026 from 10.7% in December 2025. On a month-on-month basis, labor prices decreased by 4.1% between December 2025 and January 2026. That suggests some short-term relief in labor costs. Materials tell us a slightly different story. Year on year, materials inflation rose to 3.5% in January 2026 from 2.7% in December 2025. Month on month, materials increased by 2.3% between December 2025 and January 2026. So while overall inflation is falling, materials showed upward movement in January 2026.
Now, as anticipation builds up for the State of the Nation address, Ghana's trading community is calling on government to tackle insecurity affecting cross-border trade. This follows a recent killing of Ghanaian tomato traders in Burkina Faso, an attack condemned by Gov't as tragic and unacceptable. Speaking to Joy Business, Gov't Vice President Joseph Tetepadi urged President Mahama to use the address to strengthen security and protect traders operating across borders.
It's self-sufficient. Every country will, one way or the other, depend on someone. As much as we depend on Burkina Faso for our tomato produce or import, Burkina Faso also depends on us. They patronize our port, our harbor. They patronize our port. So no country, Burkina Faso is an inland country. They don't have port, so they patronize our port. So if we don't have security assurance, they might not come to apply our port. The same applies to Ghana. If we are not we don't have secured environment, we might not go to apply and then patronize their produce. So it's a challenge. So what we want to see, one of the things when it comes to security is alert. You know, most times, U.S. will tell his citizens, don't travel to this country at this time of the season or at this time of the year. They try to give security alert. I don't know when is the last time our national security has given us alert as business community. What is going on in our borders? So we need a timely intervention when it comes to information. National security should be able to give its people information that this is what is going on at Burkina Faso. And when you're even traveling to Burkina Faso, don't go to this part of the country. So that information must be there for the business community. So security alert is very necessary in terms of business because you can't do business in an unsecured environment. And as a result of this, what is happening now, you see that there's a little price hike in the market space when it comes to tomato produce. Yes, a tomato that you can buy for 10 pieces for 10 cedis. Now maybe you buy 5 pieces for 10 cedis because it's a demand and supply. And if our women are not going, that's a challenge, you know. And like I said, no country is self-sufficient. No matter what, if we even produce all the tomatoes that we need in a country and there's excess we want to export, you still need a secured environment to export to. So if we are traveling to Togo, what happens? We must get alert. If we are traveling to Benin, especially the West Africa sub-regions, we must have an alert as when to go and when not to go and what to go. You know, we have this Boko Haram in Nigeria. So we should get all this alert that if you're a Ghanaian, you are traveling to Nigeria, don't go to this part of Nigeria. Or even if you are going, you must make sure you have a secured alert, and then you take a decision on your own. Yes. These are some of the things we're looking for from government to do.
All right, you're watching The Marketplace. Ghana is opening up the 5G spectrum to competitive bidding. We'll discuss that on Let's Talk Tech ahead. And welcome back. Ghana is opening up its 5G market. The government has announced it will end the current exclusivity held by next-gen infrastructure company, allowing telecom operators to bid competitively for 5G spectrum. Officials say the move aims to speed up nationwide rollout and improve digital access for all Ghanaians. Joining me is lead for Eyes of Africa, Henry Kobler, to discuss this. Good afternoon to you, Henry. So, what do you make of this? How will opening up the 5G spectrum to competitive bidding affect internet access and speeds across Ghana?
Thank you very much, Daryl. So this is a very significant policy shift. I mean, if you're looking at the initial idea where next-gen infrastructure company had brought through to government, it was more of an idea of efficiency. I mean, it was really to duplicate duplications of towers and low capital expenditures, accelerate the rollout. But I think that it's been more than a year since we've had that, and we've not really seen a significant rollout that comes in. But again, even on this path, there were concerns by some of the telecom companies that they really wanted to own the infrastructure and roll out themselves. And so this really gives a policy direction. I'm glad that it's not scrapping off what NextGen had put in place, but also coming to add up and opening it up. I think that generally what it's going to do, it's going to really accelerate the rollout, because I know definitely that some of the telecoms are really in a position to fast track their rollout when it comes down to the 5G. And they really want to just give a service quality as well. Over the time, I think in the past few months, there have been complaints on the service quality of some of the networks. And I'm sure that this really comes to solve some of the problems that we're sort of having. Again, give some level of investor confidence in there. Some investors really, they do like policy clearance or clarity and open markets so as to be able to play out. And so I think that it really comes at a very good time where we're looking at a lot of internet accessibility all across the country.
Well, talk to us a bit more about the risks and opportunities for telecom sector operators. I mean, what does this mean for them as well?
So, I mean, I think I've highlighted the opportunities that we sort of have where we're looking at faster adoption of 5G, which is very important. We're looking at it coming to boost the growth when it comes out to AI, Internet of Things, smart cities, and all of those things, which we sort of playing out now. And again, it also gives that enterprise broadband ecosystem, which is very important. I mean, we've seen quite a lot of investment go into that side. And so I think rolling out 5G really gives a bit of that ecosystem some boost in terms of speed and quality. But the risk really comes in terms of the higher consumption prices that the spectrum is going to cost, really. I think that comes directly or indirectly to the consumer. And so generally, when you're having almost all the telecoms sort of bidding and putting on their infrastructure and all of that, everybody's sort of incurring the same cost, rather than what NextGen will have probably put all of them on one mast tower and just broadcasted them. And so generally it comes in with a bit of cost, which directly is going to affect the consumer. Again, we're also going to have infrastructure duplications across board. You're going to see quite a number of masts all over. I mean, all these infrastructure really comes through. You're also going to have to now put in a lot of people on board to be able to take care of some of these infrastructure that's sort of there. Even though it provides some level of jobs, but it sort of gives some level of duplication as to something that could have really been rolled out at a single point. And again, you're also having small players or small telecom companies or even upcoming telecom companies who are not really in a monopoly point, really struggle and cry out for that. And I think that generally that comes to it. But for the average consumer, for us, we're just looking at quality. And so far as we are getting quality and we're looking at a greater pricing, which would come in when the policy rollout comes in and government shapes pricing as it has always been doing, I think that we sort of will be in a good position.
Yeah, and I guess that's what is most important for consumers and for anybody in the tech space. At the end of the day, is data affordable? Can I afford it? Can I pay for it? That is an answer that you're looking for at the end of the day. Thank you so much. Great to see you, Henry Kobler, lead Eyes of Africa. And that's it for the marketplace. More news on our website, myjoyonline.com/business. I love multiple versions of me, myjoyonline.com/business. My name is Darryl Kwa. Thanks for watching. We will be back same time tomorrow.